Welcome to Behind the Business, the podcast where we cut through the noise and get real about running a profitable business. I'm Pamela Hilton, CPA, with over 30 years in accounting, tax, payroll, and business advisory services. Each week, I will share stories from the field, answering real questions from business owners, and give you the straight talk you need to grow and protect your business. No fluff, no hype, just practical advice that works in the real world. So, let's get to it. Hey, welcome back to Behind the Business. I'm Pamela Hilton, CPA and business advisor. And today we're talking about business write-offs. If your biggest question right now is, what can I write off? You're thinking way too small and you're focused on the wrong things. If you're a business owner right now, I know this may sound a little harsh, but I've been working with hundreds of business owners over my career, which spans over 3 decades. And I can tell you this, that mindset keeps you stuck. What can I write off? It keeps you in the spreadsheet, DIY spreadsheet and list mentality if you are focused on the write-offs. And I get that question a lot, especially when I'm talking to a brand new business owner. And I usually have them start out. We have a tax organizer we send clients every year. It's a great place to start. But if you're an existing business owner, you have a business that's been running several years, and you're still focused on what can I write off, the write-offs, then you are keeping your business small intentionally. You are not thinking big enough, and you're keeping yourself stuck, because write-offs do not build wealth. Write-offs are not a business strategy. They don't create profit, and they are not a way to manage cash flow or pay yourself. And they definitely do not help you fix your broken business finances by finding more write-offs. Okay? So think about that for a minute. If you're constantly chasing the write-offs and the expenses for your business, you are focused on the wrong direction, the total wrong path for your business. And like I said, it sounds a little harsh, but that's the reality I see with so many business owners, that they get hyper-focused on this one area of their business, meanwhile ignoring a little bit or a lot of the other aspects of their business that could really help them so much more in the growth area. So, why is this mindset so common? Why are so many people focused on this? And why do you see a lot of the marketing and the scrolling that you see, the reels that you see and the ads that you see online about these are the top 10 write-offs, top 10 tax deductions, what your CPA doesn't want you to know, these tax deductions your CPA is hiding from you? Why do you see all of that come across your feed, especially as we get towards tax season? And all the social media, all these tax influencers are flooding your feed with all of this. It's a great hook. It reels you in. They're selling you a great little product. They're selling you an entry-level product for whatever it is they're selling. It gives you the illusion that you're in control of your business, that you're saving money, that you're solving problems, that you're making decisions for your business. It gives you that kind of illusion of all of that. But that's not a strategy by any means. Controlling your tax, your deductions is not a business strategy. It's far from it. So it seems like you're taking action and you're being a decision maker and you're being a manager in your business, but it's not a very impactful way to run your business. It's not having a huge impact on your business. And you're thinking just in terms of this tax year, this write-off for this year. And it's not a long-term goal. It's not a long-term strategy. Okay? And it keeps you in that mindset that you and you alone are responsible for your tax savings. And a lot of times I'll have this conversation with newer clients that I'm responsible. I take a bulk of the responsibility to save you as much in taxes as I possibly can. I need to know what you can write off and what you can't write off. You need to run your business and do the running of your business. And that's why we have the packages that we have for some of our bigger business owners. It's an all-in-one package where we do the bookkeeping and the accounting and the tax planning and the tax preparation and all the things for them, the payroll, and it's all wrapped into one service with advisory and all of it all together, so that they don't have to worry about all of those things. We do it all for them. And then we have meetings and discuss it all for them and talk strategy, because then we can focus on the real tax savings and saving them money and ways to maximize all the things that they're doing. And it's not so much focused on just the little one tax deduction here and there. It's a whole comprehensive strategy that involves the whole year, multiple years, what's going on in the business, what's going on with them personally, their goals, their financial goals, how they're building their wealth, all the things. It's all rolled into one. It's a huge strategy. So just focusing on one little tax deduction here or there is, like I said, it's too small to have an impact on your business. So what write-offs actually do? Here's the thing. A write-off reduces your taxable income. Okay, you have your revenue and then your write-off, your expenses. But if you spend $10,000 on something to write it off, you've still spent $10,000. That's a cash flow. You've spent it. It's out the door. Okay? It's still an expenditure of money. If you're not making money, if you're in a cash flow deficit at the end of the year and you're looking for tax deductions and you have to spend that money for the deduction that you don't really have, that's a cash flow issue and it's short-term thinking. And if your tax strategy, quote unquote strategy, is buying a big piece of equipment at the end of the year or buying a vehicle at the end of the year for the tax deduction and financing it because you don't have the cash, you don't have the money because of cash flow issues, you're just going to finance it, that's even more money out the door because you have to pay for the financing and you're going to pay interest over the long run just for the tax deduction. Okay? So write-offs are only a small fraction of this equation. They're not a strategy. So think about this instead. Same situation. You're at the end of the year, but you've had somebody on board, an advisor, a CPA, an advisor like me on board. And instead of at the end of the year, you've already had tax planning done, and you know that you need to have some more, your tax liability is going to be high. So instead of buying that piece of equipment for $10,000, for an example, and expending that money, it's gone away. You're going to buy a car, it's gone away to the car dealership. You're going to take that $10,000 instead and put it in a retirement plan. So instead of spending that money and it goes away, you're just taking that money and putting it from one account into your retirement account. You're retaining ownership of that money. You still own that money. It's still there. It's just in a retirement account. And you still get the same exact $10,000 deduction on your tax return. Which to you would you rather do? So that's the difference. That's one small example. That's the difference between focusing on tax deductions and having somebody helping you with tax strategy. It's a big difference. Leaving money in your pocket, being smart about your money, and building wealth, and not focusing on these tiny little, can I write off my meals? Can I write off my mileage? How much mileage can I write off? Is this office expense deductible? Can I write off these boots? That sort of thing. Did my travel here or there? Is that business expense? Is that deductible? Chasing those tiny, tiny little bits of information. I think I did one of my podcasts, I talked about the Augusta rule. Putting together all this information so I can write off these $2,000 worth of rent expense that saved me $100 in taxes. Chasing after all of these tiny little things that add up to not so much in tax savings when you can just be working with an advisor who can have huge impacts, save you some real money. Okay, so this real problem, what this creates If you have this small-minded thinking when it comes to your taxes and your business and focusing just, you've got your tax organizer and you're filling it out and you're looking at the list of deductions and how did that apply to your business. It encourages kind of, I don't want to say impulsive spending, but unnecessary spending, like right at the end of the year, right during Christmas, right when you don't have that extra cash flow. It distracts from the true goals of your business: profitability, wealth building, growth in your business. It encourages reactive decision making instead of goal based and proactive decision making. So if you backed it up to September, October, and you were working with an advisor, your CPA, and done tax planning back in September, October, you would have been making proactive decisions rather than you've waited now until December, January after the fact, and you're making reactive decisions. The end, the last couple of weeks of December, and you have to buy a car now at the end of December, so that you don't have to pay a lot of taxes. Well, I needed a new truck anyway. That's how you justify it, right? And it's a disruptor of your cash flow. Okay? And I see this strategy all the time. I see clients all the time. Well, I bought a truck at the end of the year just to save in taxes. And that's old school, faulty thinking. It's what we call the bad business habits. You've heard me say that before. Try to have good business habits rather than the bad business habits, because the bad business habits are really hard to break. And that buying a big business asset for your business at the end of the year is a bad business habit. Okay? So again, not a strategy. It's almost like panic spending at the end of the year and labeling it a tax tactic. Okay? And then I want you to just think a little deeper on this. All these little wins you have by scraping together your receipts at the end of the year and finding all these little deductions. Would your time be better spent working on a better accounting system where you take the time, work with your CPA, work with your accountant, getting the right software, building a system where it's automated, you're using the AI the right way, and it's automated so that next year all those beautiful numbers are done for you, and your accountant can do the tax planning effortlessly for you, and you're in such a better situation. And yes, you've made an appointment with that financial planner and you have the business retirement plan all set up. You've got all the things already set in motion. Instead of worrying on taking the time, use your time better spent focusing on the things that are going to have much bigger impact than worrying about those tiny little deductions. Okay, so what do the higher level business owners do? What are the business owners that are working at a higher level that I work with in my business, my clients that are working at a higher level, the multiple 6-figure, 7-figure business owners? They don't ask me, what can I write off? They don't ask me, how do I pay less taxes? They don't ask me, can I do tax planning this year? They already have those things already set up throughout the year. They're in a package plan. They've already got all of these things in place. We've already got their accounting system already. It's a well-oiled machine. We're fine-tuning it throughout the year, and we're identifying things throughout the year before, we've already asked the questions. We're already looking into things. We've already got the plans in place, and we're executing them throughout the year, and we're having discussions about them, right? So they're asking things like, how's my margin? How are my profits this year? How much can I max out my retirement plan? How much can we put into the retirement plan? How much can we pay ourselves? How much can we bonus out this year? How can we hire somebody this year? Can we hire somebody else? Can we buy the building? Can we buy our building? Should we buy the building? Can we expand? Those are the types of things that our higher level business clients are asking. Not, should we buy, what can we write off? Those are the kind of questions they're asking. So what should you be focusing on instead? Okay. You should be focusing on making sure that your accounting system is solid, that you have the right numbers, that you have all of your accounts are linked in your accounting system, that it's recording all of the information in one place so that you can see all the information all at once in your accounting system, that you understand what you're looking at, that you know the difference between revenue and profit, that you understand cash flow, that you know how much cash flow you have each month so that you know how much to pay yourself. Do you know what's left over at the end of every month? That you know how much of an emergency fund you have in your business and how much you can spend at any given time. That you understand the importance of tax planning and strategic planning, and that you also know the importance of investing in your business with advisors and a CPA. Skip the business coaching. If you are working with a business coach who has not even asked you about your accounting system or is working with you with numbers that they don't even know if they're correct, you can't work with a business coach and working with KPIs and they're throwing out all this lingo at you and working with numbers. If they don't know if your numbers are even correct and they're working with your numbers, then you can't rely on that data. Okay? So if you're working with the right CPA, we do this in our firm. There are other CPA firms out there who are business advisors. You don't need a business coach. Your CPA is your business coach. They should be. Okay? So if you don't know how much money you can pay yourself, how much money you're keeping, what the numbers are telling you, that's the time to seek the advice of your CPA or work with a CPA who can help you. And if you don't know the answers to these questions, what's my profit? What's my revenue? What is my cash flow? Can I give myself a raise? If you don't know the answer to those questions, then the write-offs are the least of your problems. You have bigger issues to deal with than the write-offs. And that's where you should be focusing your energy. Okay? So fixing that and working with a CPA who can help guide you towards tax savings as a strategy is probably a better effort than finding tax deductions. Okay? So it's at some point you have to decide what kind of business owner you want to be. Okay? Do you want to be one that's constantly putting out fires and reacting, and your decision making is based on reactions and trying to save where you can and scrape together all those savings? Or are you going to be the business owner who is working on your business, providing a business that is building wealth? It's a tool to provide profit and wealth for your family. You're building this business that is structured, profitable, and growing and healthy. Which business owner do you want to be? Which path are you going on? Because one is stressful and can be overwhelming if you're constantly putting out those fires. And the other one is one where you are in control and you are making the decisions and you are setting goals and reaching them. And those are two completely different paths and very, very different mindsets. And the second one, where you are in control, is the one where you are getting advice. You are delegating and you are receiving advice from experts and experienced personnel and coaches and advisors. And they're going to lead to very different results. So if your financial strategy is starting and ending with your write-offs, you're playing a very small game and you need to think a little bit bigger. If you are generating some real revenue in your business, 6 figures and above, approaching 6 figures and above, and you are not clear on your finances, you're not feeling super confident, and you're definitely not confident about your deductions, you need to implement some sort of strategy. You need to have solid numbers and you need to have a strategy. And you need to get a CPA who's an advisor on board. If not for last tax season, then definitely for this tax season coming up. Okay? So I'm going to leave you with this. Write-offs don't create wealth. Smart decisions and strategy are what create your wealth in your business, not the write-offs. Okay? So if this podcast helped you out as a business owner, fabulous. Please share and subscribe. If you know a business owner out there who could benefit from this advice, please share and have them subscribe to my YouTube channel and to this podcast. I appreciate it. Thanks, and I will see you next time on Behind the Business. Thanks for listening to Behind the Business. If you found this episode helpful, please share it with another business owner who could use some real-world advice. For free resources, tools, and to submit your own business questions, head on over to my website, PamelaHiltonCPA.com. Until next time, keep building smart and keep looking behind the business.